Hey traders, Jason here from Levitt Brothers. So I'm going to talk about the current state of the market. The indexes are doing fine. Breadth is, well, we'll check it out. Last year was a good year. 2023 was a good year. Indexes have done very little for the last couple months. Money is definitely rotating around. You probably know this if you're involved with the market. Some groups doing well, some groups not doing so well. So let's check it out. First, we're going to look at the indexes. Then we're going to look at some breadth readings to try and get an idea of what's going on beneath the surface. All right, first up, this is the S&P 500 monthly chart. Obviously, things don't change month to month, so it's not any different than last month when I did one of these videos. Trend up 2020, 21, cup and handle pattern 22, 23. And then 24 was a huge up month, or a huge up year. Last month was we got an outside candle right here where both the high and the low of the previous month were taken out. Now we have an inside month. All the data points so far in February are contained within January's high and low. So fairly neutral. Okay, overall, market's in really good shape, trending up. You got to respect the uptrend. The trend is up until it's not. But in the near term, you can just look at this. We got a lot of overlapping candles. So even though the overall trend is up, not a lot of price change over the last 4 months. Now let's zoom in with the weekly. Here's the S&P 500. So you can see the cup and handle pattern on the left side. Then we've been in a pretty good uptrend, but there's been some pretty decent disruptions. Like that's a kind of a painful drop. That's a very painful drop. A little drop there, little drops along the way, but overall trend obviously super strong up. But focusing on here the last couple months, there's just a lot of overlapping candles, some up, some down, some gaps and stuff that don't show up here. And the net of the last 3 or 4 months is like zero price change. So that's what's going on here. We're not getting as many runners as we used to get. Certainly not as many as last year. So that tells us we just got to change our management. Instead of, buying that breakout and thinking it's going to run 30, 40, 50%, maybe we're buying a dip and being content with 10 or 15%. Okay. We're exiting trades, when we can, rather than waiting until they pull back, and trigger a stop. Okay. That's just the way it is. We don't have this kind of a trend. We don't have this kind of a trend. We have a lot of choppy back and forth action where we're up 1 or 2 weeks, then down 1 or 2 weeks. So, trades that look great one day, 1 week don't look so great the next week. So because of that, we got to be ahead of the curve, taking profits and not waiting until stocks pull back and trigger stops. All right, here's the NASDAQ, pretty much the same thing, cup and handle, huge uptrend coming out of that. Higher lows, lower highs. NASDAQ is being compressed into a triangle pattern here. The trend is up. We got to respect that, but this can also, just have a quick flush down to like it's 50. You never know. You don't want to be, I don't think this is an environment where you can be all in just because there's so much just indecision in the near term. Tons and tons of overlapping price action. If you closed your eyes and bought at any point in time in the last couple months, chances are you're basically flat. That's just the way it goes. That's the way the indexes have gone. So, don't be too, lean bullish, but don't be too bullish. Just because, again, trades are lasting days or a week or so instead of a month. They're not going as far. You got to be quicker to take profits. That's the current state of things, and you got to make the change, or else you end up having a decent gain be wiped out. Zooming in a little bit, here is the S&P 500. Kind of volatile. This is a painful drop there. That's a pretty good drop there. Gap down drop there. Then we have, several weeks of like a falling wedge. We broke out, made a new high, but didn't get much follow through. And now we have a couple more weeks of just, up, down, up, down, up, down, a couple big gap downs there. And in the end, price is unchanged going back 2 months. Okay, that's what it is. Okay, we're not getting a whole lot of follow through. That's just the way it is. Don't be mad at the market. Being mad at the market is kind of like, you're a surfer and you're like mad at the ocean. It's like, what's the point? It's like, it is what it is. Accept it. Devise a plan to make money with it. And if you don't do that, then just sit out. Okay. If this is not your type of environment, that's fine. You could sit out. Not a big deal. Or if you're going to trade, note the change in character, the change in personality, and do what you got to do to make money. Really quickly, here's the NASDAQ, pretty much the same situation. Nice uptrend from, off that carry trade low over here in August. But over the last 2 months, nothing going on. Some up, some down, couple up days, couple down days, nothing holds, and therefore your trading should reflect that. All right, let's get into some indicators here. Here is the S&P 500 up top versus the 5-day moving average of the NYSE AD line. Okay, so in an uptrend, you get like expansion and then contraction, a little bit below zero, expansion, contraction. That's pretty normal. Over the last 2.5 weeks or so, we've mostly been just going up and down a little bit above zero, basically neutral. No high prints. So right over here where the S&P was close to its high, there was no high print over here at all. And then even just last Friday when we got close and there's no high print over here. There's big void space over here. So it's just the way it is, okay? The market is neutral. Advancers and decliners are approximately equal. The S&P 500 has not done anything in the last 2 weeks. You could argue that the market has done really well because this was like DeepSeek news and this is the tariffs on Canada and Mexico, and you could say, hey, the market's done really well to absorb those negative news items. But bottom line is the market has gone nowhere for several weeks, and the advanced decline line reflects that. It's very neutral. There's no strong bias here in the near term. Okay, here is the cumulative AD line. Same thing, flat going all the way back to late September, early October. So while the market has done that, gone up a little bit, the AD line is just flat, and that's normal, okay? Because the AD line could be slightly worse off than the market because the market you're going to have some outsized winners that carry the load. So you can have a big winner, but then you can have 2 or 3 losers that counter it, which is why it's okay if the AD line lags it a little bit. But market up a little bit over the last 4 or 5 months. AD line same, is basically flat. So again, very neutral, no strong bias here. I think you can be bullish, you could be optimistic, slightly optimistic, but I don't think, as far as how you're positioned in the market, I don't think you could be all in, really excited, enthusiastic, thinking the market's got lots of upside to go here, because there's no indication that there's a lot of strength beneath the surface here. All right, here is the 5-day high-low. Okay, so it's all stocks, number of stocks making a 5-day high versus number of stocks making a 5-day low. Okay, during good times, you tend to just get oscillating values. Okay, up to 2,000, down to 2,000, just because even in a period like this, you're going to get a bunch of stocks that hit a 5-day low. It's such a short-term indication. Okay, a little bit of a warning here that there was no higher print here, but overall, this is kind of neutral. I think it's notable that we have these deeper plunges below minus 2,000, because in an uptrend you tend to get 2,000 tends to be a floor. So when you get repeated drops below 2,000, it is telling. As a point of comparison, here is the 2023 pullback. This is August, September, October of 2023. The market was doing really well, took 3 months off. And you could see here that we have, quite a few drops below minus 2,000, and then we get going after that. And once we get going, we have shallower drops, fewer drops. Okay, so there's a difference between this and this. Okay, so you don't really want to see that many drops below 2,000, which is why these drops here are a little bit of not a concern, but at least something to be noted. If I were to do another point of comparison, here is the 2022 bear market. Let me draw a line here. Here's minus 2,000. So you can see not only do we have a lot of drops below minus 2,000, but we have deep plunges to minus 4,000 and below that. Okay, we don't have that right now. If I were to come back and say here's the current market, what's at most what does it resemble most? Does it resemble this, where we had no drops? Does it resemble 2023, where we definitely had some drops? Or does it resemble 2022, where we had not only drops below minus 2,000, but drops below to minus 4,000? I would say right now it more closely resembles 2023, where we actually had a 3-month correction within an uptrend. Okay, so now if we come down here and we bottom out and we can make a higher print and we could prove that we could stay up there, that's fine. But these dips below minus 2,000, at least hint that there's some nervousness below the surface. All right, so moving on, here is the Russell 3000. It's the SP 500 up top, Russell 3000 stocks above their 20-day moving average. Okay, during good times, okay, you can see this. We get some oscillations between, up to 70, 80%, down to 40%. So we do get dips below 50%. That's fine, because, you get these little moderate pullbacks. You are going to have more than half the stocks are going to be below their 20-day moving average. But then you get expansions up to 80%, which is indicative of pretty good participation. So right now we have a print below 50%, not a huge deal. It's kind of neutral. It's not super strong. It's not super weak. This is notable that we couldn't get a high print here, but I'd say it's pretty neutral and not anything to be overly concerned with. As a point of comparison, if I come back over to 2023, you can see that 60% acted as a ceiling, so we got much deeper drops to 20%, and then we got rejected by 40%, by 60%, as you can see there. Okay, so during good times you tend to get a floor near 40%, but obviously when the market trends down, you get deeper moves and then an inability to expand. And as another point of comparison, here's 2022, where we actually had a bear market. And you can see that the prints are much deeper. Here's the 50% line. So instead of, during good times, you get dips to 40% and then expand, down to 40% and then expand. Obviously, we don't have that right now. We have, or we didn't have that here. We got much deeper print. So if I were to go back and say what is this current market most closely? I would say right now it most closely resembles an uptrend, okay? But, if this pulls back and comes up here to 60% and gets rejected, that would lean us down. But if we can get above 60% and actually go between 40 and 80%, that would be ideal for an uptrend. Right now we're kind of in the middle. It's kind of non-committal, not really sure what we want to do. All right, so overall, indexes are doing great overall, but they're definitely in consolidation mode. They're unchanged going back 2 months. Trading has definitely changed. Okay, instead of getting a lot of runners, we're getting good moves, but then those moves are given back. So you got to be content with smaller wins, and when you get a good win, you got to take some off the table and not trail it with a stop, because if you trail everything with a stop, you're going to end up giving back some of your gains. Beneath the surface, breadth is kind of okay. It's not horrible, but it's not great. It doesn't have me excited to be all in. So I'm partially in right now. As far as my own trading goes, not that excited to put more money to work, just because I just the state of things is such that the market just doesn't have a whole lot of momentum right now. That's just the way it is. All right, hope you got something out of this, and I'll see you next time.